Welcome to today's Retirees with Wayne Maslick, Certified Financial Planner, a program designed to educate you on family-focused retirement and tax planning. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management and Alan Thorley Deloitte Insurance.
And welcome to today's Retirees with Certified Financial Planner Wayne Maslick of Great Lakes Benefits and Wealth Management. Wayne, previous shows we've talked about consequences of low returns and the passbook savings that we have down at the local bank.
Low-paying CDs too, yeah.
Right, low-paying CDs. Today we're going to talk about kind of the flip side of that. Mm-hmm. We're with an institution, or Uncle Bob sold us something 30 years ago, mm-hmm. and we're paying high fees or high commissions. Consequences of that are not very good either, are they?
Yeah. In a few minutes here, I'm going to go to the board and try and show folks the true damage that paying too high of commissions or fees can do to your retirement planning. Now, when people invest in risk money, again, last show we talked about the consequences of low returns with safe money and not earning enough rate of return on your safe money.
Right.
Now we're talking about your risk money. These are monies that you're willing to gamble with. I like to use the rule of 100. If somebody is 65 years old, that's how much percentage of their investable dollars they should be keeping in safe stuff.
Sure, okay.
The rest, we subtract 65 from 100, and we have, 35?
35,
So
right.
35% of their monies can be then invested in risky stuff.
Now, when you say risky, some people, they say, oh, no, I don't want to. But you're talking stock market, bonds, things like this.
Yeah, well, there's different degrees of risk. There's, conservative risk, there's moderate risk, and there's, aggressive risk where we're swinging for the fences. It doesn't matter what the person chooses as far as their risk tolerance. There's going to be fees and commissions potentially in all those areas of risk.
Okay.
When I talk about a risk account, I'm talking about an account that can lose money.
Sure.
In other words, you can go backwards from month to month when you look at your statement. If there's potential to see red numbers or numbers in parentheses because of the market fluctuations, then it's risk money.
Okay.
And you have to keep an eye on the fees and commissions that you're going to pay for those risk type of accounts.
Okay. Now, if, let's say you have a stock or a bond or a mutual fund, or, because a mutual fund can be in either of those stocks or bonds, correct?
Sure.
So,
or a mixture.
Or a mixture.
A balanced account would have both.
So when you look at your return, let's say that, some funds are doing 10%, some are doing 12, some are doing 6, you know how that works. But if you're paying huge commissions, that comes right out of those gains, don't they?
Yeah, there are two ways to buy a security.
Okay.
You're either going to buy two main ways, I'll say. You're either going to buy one from a broker,
okay,
or you're going to buy one or invest in one with an investment advisor.
Okay.
Okay.
All right.
Now, I'm what you call an investment advisor. The true term would be a registered investment advisor, an RIA. I am registered with the State of Ohio Division of Securities. They police me.
Okay.
They're the ones that monitor me, audit me every year. A registered investment advisor does not earn a commission on a security.
Okay.
Okay, so I am what's called a fee-based financial planner, fee-based money manager.
All right.
The other way to get into risk investments is through a broker. Now, most of the time, a broker will earn a commission when they do the security transaction.
Okay.
So if you go to and buy a stock from a commission broker, they're going to make a commission every time you buy or sell a stock,
okay,
or a bond, or a mutual fund. Now, when we get back from the break here in a couple minutes, I'm going to talk about the different sales loads on mutual funds.
Okay.
And a lot of folks still don't understand the different loads on mutual funds. So I'm going to try and clear that up here in a minute. I'm also going to show folks the high fees in variable annuities. You have to be very careful with variable annuities. They do have some benefits, but they have, in a lot of instances, very high fees. I mean, fees as high as 4%.
Wow.
I mean, that's, if your fee is 4%, I'm not talking one-time deal. I'm talking every single year, 4%.
Wow.
That adds up, and I'll show you how that adds up here in a minute.
Yeah, if you're only gaining 4%.
Yeah, or if you're losing 10, now you're losing 14.
Right.
Remember,
Wow.
these variable investments, these risk investments, they go up or down.
Sure.
Market was down, 40-ish% here in 08.
Right.
If you're down 35 in your variable annuity, now you're down 39.
Wow.
If you're down 40, now you're down 44. If you have a 4%. Now, they're not all that high.
Sure.
Got to keep an eye out, see what kind you have, just to keep an eye on that stuff.
Right.
But I'll show you in detail here in a minute.
Well, this, this is why you need to call Wayne, so you don't get caught in situations where you're getting, in my vernacular, getting beat up because you didn't make wise choices.
Yeah, or paying more than you should be.
Right. Absolutely.
Say it nicely.
You say a little.
Yeah.
He's a little more diplomatic than I am. Well, we're going to take a little break right here. When we come back, Wayne's going to go to the board, and he's going to show us some of the consequences of high fees and commissions and what we can do about that. This is Today's Retirees. We'll be back right after this.
Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com.
Wayne Maslick is a certified financial planner, which is the standard that all other financial advisors are measured. What this means to you is simply this: credibility. As a certified financial planner, Wayne assists you in family, estate, and tax planning from an independent perspective, not from a sales perspective. Wayne does not work for an investment or insurance company, but gives advice based on your family's unique needs, not the sales goals of an insurance or investment firm. Call for a free consultation with Wayne to see how to reduce your existing or estate taxes, better use the retirement funds you have, or plan for the retirement that is fast approaching. Call toll-free 866-626-3990.
Allen Thorley Deloitte Insurance has been locally owned and represented for over 100 years. That means if catastrophe happens, we've probably seen it, and we'll walk you through the process of making everything right again. Representing some of the finest insurance companies in the industry, Allen Thorley Deloitte shops for you, giving you the personalized service, advice, and coverage you deserve. Yes, it's really that simple. Let us customize a plan for your personal or business insurance needs at 800-628-1057 or visit atdinsurance.com.
Find out why Wayne Maslick, Certified Financial Planner, is the right choice for you.
Many do-it-yourselfers read and watch financial shows, but when you look at the actual rate of return that they've earned on their investments, or when you look at the state of their estate plan, are the documents updated? Is everything in line? A lot of times it's not. So those folks, if they're not doing a great job themselves, they need to come in and see me. Call the office, talk to my staff.
Now back to Today's Retirees with Certified Financial Planner Wayne Maslick.
And welcome back to Today's Retirees with Certified Financial Planner Wayne Maslick. Our topic today is the consequences of high fees and commissions. Last show we talked about the consequences of low interest rates and the returns of those. Mm-hmm. The flip side is we've put our money with our, I'm just going to pick on Uncle Bob because Uncle Bob sold me some stuff, years ago, and Uncle Bob is the resident broker in the family, and he's getting very wealthy off me.
Yeah, he's probably retired already.
I'm teasing, but there are consequences, and there are things that we need to be careful about when we're dealing with the money we have to invest.
Yeah, when you're talking, again, we're talking risk money today. Money you're willing to take some risk with in the markets. And you can either purchase or invest with a broker or an investment advisor. Generally, the investment advisor is fee only. The broker is commission.
Okay.
So there's a commission generated when the securities are purchased or you invest in.
Okay.
If you look at the board here, on the left side of the board, I have examples of what are called loaded mutual funds.
Okay.
You've heard there's two types of ways to purchase mutual funds. Either a loaded fund, where there's a commission involved,
Okay.
or a no-load fund.
Okay.
A no-load fund, there's no commission involved.
So how does the broker make money off of that
Well,
sale?
brokers use a loaded fund.
Okay.
And this is how they make money.
I see.
When you buy or invest into a mutual fund, you're going to choose one of 3 types of share classes.
Okay.
Okay. The first is an A share class.
Okay.
Okay. The A share class is a front-end load. And generally the front-end load is anywhere from 3 to 5.5%.
Okay.
So if it's, say the load's 5%, you put 100 grand in XYZ mutual fund.
Okay.
The very next day there's 95,000 in the account.
Okay.
Okay? It's called a front-end load.
All right.
Now the good thing about the front-end load is they have the lowest management fee.
Okay.
So they get you
Because
up
they
front.
get it up front. All
Get
right.
it up front. Broker gets paid. The broker dealer gets paid. That's the company the broker does all of their trades with.
Okay.
That's the broker dealer is who is responsible for the broker.
Gotcha. All right.
I don't have a broker dealer. I report right to the state. But a broker has to align themselves with one broker dealer.
Okay.
So out of that load, the broker dealer gets paid and the broker gets paid.
Okay.
Okay?
All right.
The next share is what's called a B share. B as in boy.
All right.
There's no front end load on a B share. It's actually a back end loaded fund. And the way that works is in the first 6 years, there's a 6-year back end load. So if you withdraw more than what the load allows or what the fund allows, you're going to pay a fee,
Ah.
a penalty.
Okay.
You know, a lot of, we've talked about annuities, the fixed annuities in the past that I like, the fixed and fixed index, and a lot of the brokers will really talk bad about them. Oh, if you pull too much money, there's a penalty. Well, the broker has the same thing in a mutual fund. Okay?
Sure. Okay.
Okay? So the broker, if they sell you this, you have to keep your money in there at least 6 years before you can withdraw the whole account.
I see. Okay.
The other thing that a B share does is it charges you a higher fee for 8 years. So I'll give you an example.
Okay. Yeah.
Let's say this A share has a fee of 1.25% per year.
Okay.
Okay. That's a management fee. That's what the manager gets paid to manage all the funds within that mutual fund.
So
all the
that's on
stocks and
top of the
bonds.
front end 5% or whatever.
Correct.
Okay.
Now, the B share, no front end load.
Okay.
Put in 100 grand, the whole 100's in. But instead of the 125 a year, you will pay 225 a year
Okay.
for 8 years.
Okay.
And then it automatically converts back to an A share. So the fee drops down after 8 years to the 1.25.
I see. Okay.
Okay?
Now when it converts, do they get another 5%?
No.
Okay, just asking.
No, that's when the broker takes them to another fund company and gets another 5%.
Oh, I see. Okay.
No, I'm just teasing there. So now we have a C share. Okay? That's the third share class with a loaded fund. A C share has a permanent load or fee of this, and I'm using approximates, the same type of a fee or load that the B share charges for 8 years.
Okay.
The C share charges permanently every year.
I see. Okay.
Okay, and the reason is a C share is more, that was designed for a broker that wants an ongoing fee.
Okay.
The broker, hypothetically, the broker's supposed to be managing those accounts and moving and watching them and making sure that you're in good stuff. The trade-off is they get the fee, the higher fee, for as long as you keep those assets in that fund family.
Okay, sure. Makes
Okay.
sense.
So these are your choices with a loaded fund. An A share front-end load, but the lowest annual fee.
Okay.
A B share, no load up front, the higher fee for 8 years. You could only pull out certain amount of money for the first 6, and then the last one, no load, but you pay the higher fee indefinitely as long as you have that investment under that broker.
Wow. Okay. All right. So this is only part of what we're going to talk about.
Yeah, after the break now, we're going to go and talk about the fees in a variable annuity.
All right. Now, friends, this is extremely important why you should be calling someone like Wayne and sitting down with him, going to one of your workshops, going to your website, Wayne at todaysretirees.com for an email. All of the above, and all of this is on the screen for those of you that are on the radio. Just listen to the announcer.
You can also call and get on the newsletter list, and they get my monthly newsletter for free.
Absolutely, and it's great information. So you stay right there. We're going to be back. When we come back, we're going to finish our discussion on the consequences of high fees and commissions. This is Today's Retirees, a certified financial planner, Wayne Maslick.
Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com.
Wayne Maslick is a certified financial planner, which is the standard that all other financial advisors are measured. What this means to you is simply this: credibility. As a certified financial planner, Wayne assists you in family, estate, and tax planning from an independent perspective, not from a sales perspective. Wayne does not work for an investment or insurance company, but gives advice based on your family's unique needs, not the sales goals of an insurance or investment firm. Call for a free consultation with Wayne to see how to reduce your existing or estate taxes, better use the retirement funds you have, or plan for the retirement that is fast approaching. Call toll-free 866-626-3990.
Allen Thorley Deloitte Insurance has been locally owned and represented for over 100 years. That means if catastrophe happens, we've probably seen it, and we'll walk you through the process of making everything right again. Representing some of the finest insurance companies in the industry, Allen Thorley Deloitte shops for you, giving you the personalized service, advice, and coverage you deserve. Yes, it's really that simple. Let us customize a plan for your personal or business insurance needs at 800-628-1057 or visit atdinsurance.com.
Find out why Wayne Maslick, certified financial planner, is the right choice for you.
Then there's folks that need to come see me that maybe are a recent widow or widower and just need some help getting their financial house in order. Or there's folks working with current financial advisors or brokers, and maybe the brokers are taking too much of their money at risk, losing it to the stock market. So come see me, folks. Call the office and set a time that's comfortable and convenient for you, and I look forward to meeting you.
Now back to Today's Retirees with certified financial planner Wayne Maslick.
And welcome back to Today's Retirees with certified financial planner Wayne Maslick. Our topic today is the consequences of high fees and commissions. And Wayne is at the board today explaining, we were just going through the loaded mutual funds and the consequences of paying 5% up front on some of these and 1.25% continually.
Yeah.
You know, that can eat up pretty quick.
Absolutely. Well, you figure, if you're just paying 1% more than you should, a 10-year period, that's 10% off of your total asset that's there. It's okay. I mean, there's certain. How can I say this? There's income generated all across the United States in every field. People have to make a living, obviously. There are expert brokers, and there's nothing wrong with this type of share class. I'm not saying this is a bad thing. I just want folks to know, how these things work.
Sure.
And if you're getting value, if you have a good broker that works with you and you have a good relationship and they don't just sell you something and forget about you, then that's good. Nothing wrong with this. But just know that if you're not satisfied with where your money's at, there's better ways, I think, to handle things. And we've talked about that in other shows, how I manage my portfolios. That's not the topic of today, though.
Right.
I just want people to look at what they're doing and look at the potential fees and commissions they're paying.
Right, absolutely. Now, let me just play devil's advocate just for a second before we go over to this side of the board. The broker, he's going to say that you're going to generally earn a higher return. That's what I've been told anyway.
Yeah.
Let me put it that way. Because you are in a loaded fund.
Yeah, no, that now there may be some loaded funds that outperform no load funds, but I'm a fan of no load funds.
Okay.
Okay. The folks get in or can get out whenever they want, you know, the next month if they want, and there's no sales load to get in or out.
Okay.
The lower the fees, the more of a chance they have of making a positive return.
Okay.
Now, in all fairness, there is, when I work with folks and handle their no-load investments, you know, there is a fee that I charge. And we've talked about that at other shows. We won't get into that today. If people want to get specific, they can call my office and set a time. But the catch is, they can leave me whenever they want, and the fee stops right then.
Sure.
There's no strings. There's no back-end load or no higher fee for a certain amount of time. They know what they're getting in, and they have the freedom to come and go whenever they want.
Right.
That's a big difference.
Sure, absolutely.
If we look over to the variable annuities here, variable annuities can be okay too. But the fees can add up. I'm going to go down these real quick. You have mortality and expense in every variable annuity. You have an annual standard maintenance fee. You have these bells and whistle riders, these guaranteed income riders or guaranteed withdrawal rider.
Okay.
They have enhanced death benefit riders, which grows the death benefit, not the actual account value. They have the actual management fee. These management fees I just talked about on the mutual funds, well, variable annuities are made up of a bunch of mutual funds inside. They're called sub-accounts. Let's just say the average management fee for all of them is 0.9%. So if you take a mortality and expense of 1.5, you take an annual expense of 0.5, you take an income rider of 0.8, you take a death benefit rider of 0.75, and now you add the management fee of the sub-accounts at 0.9, that's 4.45% in annual fees.
Wow, yeah.
Multiply that over 10 years, that's 44%, 44.5%.
Sure. Wow.
On 100 grand, that's $44,000
Wow.
in fees. That can't be good.
No, no, that doesn't, no, not at all.
I don't care how you slice it, that can't be a good thing.
Right.
Now, there are some pros and cons to some of the benefits of variable annuities, like the death benefit potentially. Maybe the income rider can even be potentially a good thing. But you have to know what you have, and you have to know why you have it, and you have to know what it's costing you.
Okay.
Then you make the judgment call to see if it's right for you.
Right. And that what I'm hearing is there are reasons to do or not do both of these things.
Yes.
What I'm hearing you say is advice and direction and planning is critical to this.
Planning and investigating and researching. I mean, there are some variable annuity companies that have very low fees and nice returns. It just depends on the company and the person you're working with. I don't use variable annuities. I don't use loaded funds. I just want folks to know how they work.
With that excellent advice, friends, we're going to be back in just a minute with Wayne's Inbox. Stay right there. This is Today's Retirees with Certified Financial Planner Wayne Maslick.
Schedule your appointment with Wayne today by calling 866-626-3990 or visit todaysretirees.com.
Wayne Maslick is a certified financial planner, which is the standard that all other financial advisors are measured. What this means to you is simply this: credibility. As a certified financial planner, Wayne assists you in family, estate, and tax planning from an independent perspective, not from a sales perspective. Wayne does not work for an investment or insurance company, but gives advice based on your family's unique needs, not the sales goals of an insurance or investment firm. Call for a free consultation with Wayne to see how to reduce your existing or estate taxes, better use the retirement funds you have, or plan for the retirement that is fast approaching. Call toll-free 866-626-3990.
If you would like Wayne to answer your question on the air, send your message to Wayne@todaysretirees.com or call 866-626-3990. Here's today's question.
And our question today, Wayne, as we have gone through the loaded funds and the variable annuities, fee-based versus load-based, how do we figure that out? And how do you sort of take care of folks rather than Uncle Bob and the loaded funds?
Well, the way I handle clients' risk money is, I'm fee only. We don't use any of the commissionable vehicles we just talked about today.
Okay.
My fees are a fraction of what we just talked about today. And with that, they get a certified financial planner to not only help them manage their money, but also help them in the other areas of planning in their estate. And this is what we talk about every week on the show. So they kind of kill 2 or 3 birds with one stone, or one fee, I might add. When you save 2 or 3% a year in fees, that adds up. Just the compounding savings of that is huge.
Oh, certainly.
On $100,000, if we could save you 3% a year, that's $3,000 for every $100,000.
Sure.
On $1 million, that's $30,000 of savings.
Wow. Yeah.
Every year. And there's folks listening right here that have million and a lot more than $1 million. There's folks that wish they had $1 million. It's for everybody that has investable dollars.
Sure.
The lower the fee, the more in your pocket. You just have to make sure you're getting a professional. You don't want to pay low fees and or maybe even go do no load funds on your own and then risk losing your own money because you don't know what you're doing. You have to work with a competent, certified financial planner that works on a fee only basis when it comes to securities.
Sure.
And to me, that's the way to do it.
Right. Now, you were telling us off the air, there are funds that are doing very well and have for years, but you have to know where to look and where to find them.
Absolutely. I use above average, as far as rate of return goes, funds with below average risk and below average fees. You put those 3 together, you have a great portfolio when you lump, a dozen or 10 of those funds in one portfolio.
Wow.
To me, that's the way to do it.
Absolutely, Wayne. Great advice as always. Listen, friends, you need to go to the website, todaysretirees.com. Email Wayne at wayne@todaysretirees.com or pick up the phone, 866-626-3990, and let Wayne know, call Wayne and let him set up an appointment to see you. That's all the time we have. We'll see you next time.
Thank you for being a part of Today's Retirees. We trust the information discussed on Today's Retirees has been a benefit to you. To schedule a no-cost or obligation appointment with Wayne, please call our office at 866-626-3990. A free newsletter is available by calling our office or visiting our website, todaysretirees.com. That's todaysretirees.com. Today's Retirees is a service of Great Lakes Benefits and Wealth Management, Wayne Maslick, Certified Financial Planner, and is sponsored by Great Lakes Benefits and Wealth Management and Alan Thorley Deloitte Insurance. The information on Today's Retirees and information on our internet website should not be construed in any manner whatsoever as the receipt of or substitute for personalized individual advice from Wayne Maslick or Great Lakes Benefits and Wealth Management.